Welcome to the Tax.Pro show, where we help you with IRS challenges. If you've got a tax mess, you can give us a call at 806-576-3296. You can leave a voicemail with your question, and I'll do my best to get you an answer. I'm Josh, the CEO of Knapp Business Solutions, an EA with over 20 years of experience in taxation. Today is a special day. Why is it a special day? Because this week is Thanksgiving, and there's a lot of things that we're grateful for. One of those things, for some of you, might be ChatGPT. ChatGPT. So I wanted to do something a little different today, and I want to go through what ChatGPT says about the tax advantages of an LLC, and it compares facts versus myths. So I pulled ChatGPT's facts versus myths with regard to an LLC, and I'm going to do my best to dispel what Chat's answer is. Now, like I said, some of you may be grateful for AI, some of you may not be, and that's okay. But I definitely wanted to go through kind of a breakdown of what it says is a tax advantage of the limited liability company. So let's see if we can get to it. So number one, it says that pass-through taxation, quote, for the default classification, by default, an LLC is treated as a disregarded entity. If it's a single member or partnership with multi-member, meaning that the business itself typically doesn't pay federal income tax. Instead, the profits or losses pass through to the owner's personal tax return. Then, which is all correct, that's right. If it's disregarded, it's going to be on your personal tax return, Schedule C. All the earnings are just reported on your personal return. If it's a partnership, more than one owner, then you're going to have a K-1, you're going to have to file a partnership return. It definitely gets more complicated, and you're going to then still pay the taxes on your personal return. What's funny about this is the next part, and it says this avoids the double taxation that a traditional C Corp can face. Now, yes, it is true that a C Corporation does and can pay double taxation on income. However, it's pretty rare for small C Corps to pay double taxation. It can happen, but that's if you're just really not planning. I'm not sure how that fits in with the LLC as far as an advantage, because you can have LLC that files as C Corp. You can have it filed as disregarded. You can have it filed as a partnership. You can have it filed as an S Corp. But according to Chat, it's a tax advantage that it's a pass-through. So I don't know that I agree necessarily, but there you go. Number two, flexible tax classification. And this is true. So an LLC has the flexibility to elect how it's taxed. Just keep in mind, and this is my own interjection, this is not Chat, but LLCs are a state entity. And so whenever they came about, you could choose to be how you want to be taxed. And I agree with Chat on this one. So you can be taxed as a C corporation or an S corporation. You can be taxed if you've got more than one owner. As a partnership, you can be taxed as sole proprietorship. There's several options, and you can choose between how you're going to be taxed, and I agree. So on number two, ChatGPT and I align. Number three, access to business deductions and other tax planning opportunities. Here's what Chat says. Because an LLC is treated like a small business or pass-through entity, you can deduct legitimate business expenses, equipment, travel, startup costs, home, office, etc. Also, there are benefits like qualified business income deduction under certain conditions. What's funny is you could have all of that and not be an LLC. So is this actually an LLC plus? No. You can just be a sole proprietor and you have access to 100% of all of that. This is definitely not specific to just LLCs. And so I would say it is not an LLC tax advantage. So disagree, Chat. Number four, Avoid corporate level tax. So under pass-through, when an LLC remains a pass-through entity, not a taxable entity, you avoid that extra layer of tax that a C Corp has. Again, disagree. This has nothing to do with an LLC. This has everything to do with how you're classified. So no, it doesn't avoid, the LLC in and of itself does not avoid an entity level tax because the LLC is just a state entity. Really, it doesn't help you much for taxes at all, other than it gives you the opportunity to elect to be something else. At the end of the day, it really doesn't move the needle much when it comes to your taxes. Now let's talk about some myths. And this is what chat says are the myths around forming an LLC. Myth number 1. Forming an LLC will automatically save me lots of tax. This is not true. The LLC in and of itself doesn't guarantee any tax savings. Matter of fact, I would argue that it could cost you more. And so, yeah, definitely chat and I agree on this myth. That is for sure a big one. Myth number 2, LLC means I won't owe payroll / self-employment tax. And chat says, not necessarily. If you're actively working on the LLC, especially a single member or a multi-member by default, you often pay self-employment tax on your share of profits. Unless you're electing a different type of entity, we agree, chat. It definitely does not mean anything about not paying payroll self-employment tax. It's not a way to get out of taxes. If anything, it can definitely make your taxes more complex, and you want a tax pro in your corner that's going to help you. So chat and I agree on that one. Myth number 3, LLC gives you unique tax breaks you can't get otherwise. The truth. This is according to chat. Many of the deductions and benefits available via an LLC are similar to what other business structures can use. Totally agree. You definitely don't need to form an LLC to get unique tax breaks that you can't get otherwise, because all of those benefits are available, or almost all of them, to sole proprietorships, or you can form just a regular partnership, or you can go form a corporation and you have access to all of these benefits that, the myth that only LLCs get. So absolutely not true. Chat and I totally agree on this one. Myth number 4, if I form an LLC in a favorable state, I will avoid all tax. This is laughable at best. Not quite, is what chat says. State and federal tax rules still apply, and the state where you operate or earn income definitely matters. Now, choosing a state LLC for just tax avoidance without actual business operations or nexus can create all kinds of issues. And I agree, chat. You want somebody, if you're gonna form an LLC and you're trying to avoid taxes by doing it, stop. Right there. You're listening to the wrong information. Number 1. Number 2, get somebody that knows what they're doing, especially if you're looking to form in another state that you don't have nexus. Be careful, because you could create nexus and it could create lots of issues. So you want to be very, very, very careful with that. So chat and I definitely agree on that myth, and forming an LLC in and of itself does not save you any taxes. If anything, it could cost you more in tax, and definitely in penalties, and definitely in compliance. You've got to be careful. All right, practical takeaways. If you're running a business with some sort of profit, forming an LLC could be wise for liability protection and possibly for flexibility with tax structure. But don't assume that it's automatically going to reduce your tax bill or change your situation. That's where you need a tax pro. Also, you've got to keep good records. Many tax benefits depend on you properly documenting business expenses, owner compensation, all of that kind of stuff. Critical that you're keeping up with those taxes. And last but not least, I've said it once, I'll say it again, consult a tax pro. If you're trying to set up an LLC to do something with taxes, do not go it alone. You need a good attorney that you're working with. You need a good tax pro. That is going to go a very long way to you being effective and efficient with this LLC and actually getting what you need from it. Hey, I'm Josh. Thanks so much for watching. We look forward to serving you. Take care. And one last thing. Happy Thanksgiving.